You ever see those headlines about national debt and just stop for a second? Every country seems to be in debt. But wait a minute, if everyone owes money, who are they all paying? It's a paradox that can really make your head spin. Well, today, we are going to untangle that knot.
I mean, it's a question that seems to break the basic laws of math, right? You've got the US, China, Japan, Germany. Pretty much every major economy is a borrower. So who's the ultimate lender on the other side of that deal? Where is all this money coming from? And where on earth is it all going?
Okay, so the short answer? It's surprisingly simple, but it also kind of flips what you think you know about economics on its head. Believe it or not, for the most part, countries owe all that money to themselves.
All right, I know what you're thinking. How can a country owe money to itself? To get that, we've got to look at who's actually buying up all this government debt. So let's unpack who these creditors really are.
Okay, so the whole system really hinges on one simple financial tool, the government bond. Just think of it like an official IOU from the government. When a country needs cash, it sells these bonds. Investors, people or big institutions, buy them up. And that's basically them lending money to the government. In exchange, the government promises to pay it all back down the road, plus a little extra in interest.
And here is where we really start to crack this paradox wide open. Check out who's actually buying these bonds. You can see a massive slice of that pie is held by domestic investors and the country's own central bank. So a huge chunk of that debt money, it's not even leaving the country.
So let's drill down on who these domestic creditors are. We're talking about the big players right at home. Banks, insurance companies, and get this, pension funds. Yeah, you heard that right. The money you're putting away for retirement, there's a good chance it's being used to buy your own country's government bonds, mostly because they're seen as one of the safest investments on the planet.
So you see, a huge piece of this national debt isn't money that the country has, lost. It's actually just cash that's circulating inside its own economy. It's moving from the government's wallet over to the savings and retirement accounts of its own people.
And then you have the biggest player of all, the central bank. This is a huge one, especially when things get rocky, like during a big recession. The central bank will jump in and buy up government bonds by the truckload to keep things from falling apart. And since the central bank is basically an arm of the state, well, it's pretty much the government owing money to itself. It's an incredibly powerful tool, but yeah, it can be pretty controversial too.
Okay, so that covers the debt held inside a country. But of course, countries do owe money to other countries. So what about that piece of the puzzle? To get that, we need to zoom out and look at the whole global picture.
And really, the difference is pretty straightforward. You've got internal debt. Think of that as a country's right pocket owing its left pocket. The money's just moving around. Then you've got external debt. That's when the money actually crosses borders and flows from one nation to another.
And this leads to what is probably the best way to think about the whole global system. It is not a pyramid, with some shadowy lender sitting at the very top. It's much more like a giant tangled web.
Here's a simple way to see how that works. It's all about cross-ownership. So, for example, China might own a ton of U.S. debt. But at the same time, investors in the U.S. own debt from European countries. And those European countries might be creditors to China. See? Everyone kind of owes everyone else. It creates this complicated but surprisingly stable global balance sheet.
Okay, so after hearing about all these trillions of dollars in debt, it's natural to ask the big question. Is this whole thing just a ticking time bomb waiting to explode? And the answer is, well, not necessarily. Actually, debt is a really important tool for any modern economy.
So let's ask it plainly. Is government debt this big, scary monster that the headlines make it out to be? As with most things in economics, the reality is a lot more complicated than that.
When it's managed the right way, debt can be an incredible engine for growth. I mean, think about it. It lets governments make these huge, long-term investments that pay off for decades. We're talking about building roads, schools, funding massive science projects. It's also a critical shock absorber when the economy hits a rough patch, helping to fund things like unemployment benefits.
And that's why, for most countries, the goal isn't actually to get to zero debt. A country with no debt is probably a country that's not investing in itself. The real game is managing it. And governments do this by rolling it over. Basically, they issue new bonds to pay off the old ones as they mature. It's a constant cycle.
But, and this is a really important but, this doesn't mean it's a blank check. It is absolutely not a free lunch. There are very real limits, and if you cross them, very real dangers.
You see, if investors even start to think a country might not pay its bills, everything can unravel fast. They'll start demanding higher and higher interest rates to lend money, and that can set off a nasty spiral. The national currency can tank, inflation can shoot through the roof, and in the absolute worst-case scenario, the country defaults. And that doesn't just hurt them. It can send shockwaves through the entire global economy.
So, if the goal isn't to pay it all off, and if there are all these massive risks just under the surface, what is the invisible glue holding this whole thing together? What keeps it from collapsing?
It really all boils down to one word: trust. Honestly, if you take one thing away from this, let it be this. The real limit isn't the size of the debt. It's the world's belief that a country can and will keep its promises. It's all about their ability to make those interest payments, on time, every time.
There's a great line from our source material that just nails it, saying, "The system works not because debts are eliminated, but because they are continuously managed, trusted, and rolled forward." It's really this delicate dance between cold, hard finance and simple faith.
And that leaves us with one final, pretty sobering thought. This whole incredibly complex global web holds together as long as that trust is there. But in a world that feels more and more uncertain, what happens when that trust starts to crack?